More key details in the new Trump tax plan have come out. This is from the Washington Post. They report that the new Trump tax plan now will establish 3 brackets. It's what we knew before. This would be 12, 25, and 35%. However, it also keeps the top rate of 39% for the highest earners. Well, that's interesting. That's not something that we expected the Republicans to do. Now, they break it down and say that those making up to $24,000 would pay no income tax. For married taxpayers filing jointly, those earning up to $90,000 would be in the 12%. Those up to $260,000 would be in the 25%. And those earning up to $1 million would be in the 35%. And of course, anybody over that pays the 39%. So it's definitely a less progressive tax because now, like I said, you're going to be seeing people who are making $150,000 pay only 12%. Ugh. I'm sorry, 25%. I missed a bracket. Now, the proposal, however, does also double the standard deduction for middle-class families, expands it to about $24,000 for married couples from $12,700, and sets it at $12,000 for individuals. Now, that actually may sound great. Like, oh, hey, look at that, man. They doubled our standard deduction. Woo, we're in the money. But wait, they also eliminate the personal deduction, which kind of counterbalances that and sort of offsets a lot of the benefit from doubling your standard deduction. So you can't take them both at the same time. Now, Republicans do also plan to expand the child tax credit. Hey, that's decent. They expand it from $1,600 to from $1,000 and add a $300 credit for each parent and non-child dependent, such as older family members. So if you got older family members living with you, an extended household, well, there's an extra $300, $600, however many people you've got living with you. Okay, so there's some things that might help the middle class. However, they also get rid of a lot of deductions. For one, they get rid of a 15% credit for individuals over 65 who are retired and on disability. Now, currently, these individuals can claim up to about $7,500 for a joint return, $5,000 for a single individual, and $3,750 for a married individual with a joint campaign. Now, the bill would also repeal the adoption tax credit, no longer allow deductions for tax preparation, and repeal credits for alimony, and deductions for moving expenses would also no longer be allowed. So again, a lot of that stuff impacts people who are poor and middle class. So here's the big one. The mortgage interest, the home interest deduction, right? Now, under the Republican plan, existing homeowners can keep the deduction. However, future purchases will be capped at $500,000. Presently, Americans can deduct interest payments made on their first $1 million worth of home loans. So what this does is that it, again, impacts people who are middle class who are in larger cities. For example, New Jersey, New York, LA. So places that have expensive homes, you now can no longer deduct as much. You can only deduct half of what you do now in, the payments go into your home. So again, that's actually raises taxes on the middle class. Now there's another change, the elimination of the medical expense deduction. So currently you can, of course, deduct medical expenses, gone. Okay, well, if you're poor, middle class, and you have, medical expenses that you have to pay, well, you no longer are able to deduct that. Now that's essentially a raise in taxes for you. So, but Republicans are like, no, that's okay. Doubling the standard deduction and all the other stuff that we're doing, that'll offset that. And maybe in some cases that's true, but in other cases, perhaps not. So, and now they go to limiting the state and local tax deduction. Now that, again, will have a large impact on larger cities. So that's all the changes that currently are applying to the middle class. So, and we don't know what kind of impact it'll actually have until they do an analysis on it. And I'm pretty sure the CBO is going to run the numbers, and we'll talk about that more in depth. However, how does it impact the rich? That is the important question. Now, For one, the Republican plan was to eliminate the estate tax. Now, this doesn't actually do that, at least not immediately. Now, the plan is double the threshold from $5 million to $11 million. So anything under $11 million, you won't pay an estate tax on. So super, super rich families will still be able to take advantage of the estate of opting out of the estate tax. Now, the estate tax, like I said, gets phased out completely within 6 years of this plan. So now, first it doubles the threshold, and then they get rid of it completely. Gone. Okay. Again, that's something that 0.2% of all households in America pay. So this is going to benefit the super wealthy, and especially the children of super wealthy Americans. Now, another thing that benefits the wealthy, the corporate tax rate. So in this bill, multinational corporations overseas will now pay a 10% tax, and this applies worldwide. So automatically they're going to get taxed 10%. So they say, oh, but that's to avoid all these corporations stashing their money overseas. So instead of letting them build it up overseas, what we're going to do is we're just going to have a flat tax rate of 10% on all earnings overseas that you're going to have to send back to the government. Now, this is sort of like a permanent tax holiday. So, and they've done this before as far as these tax holidays. We had one under George W. Bush, which didn't work at all. They brought back money, but they didn't create any jobs. Now, this tax bill also has a mandatory tax holiday. So all the corporations, the $2 trillion they have overseas, they're going to send it back. But it's going to be taxed at very low rates, somewhere around 5%. Again, we've already done that under George W. Bush. And what happened? They didn't create jobs. No, what they did is that they did stock buybacks. So the Trump campaign and the GOP is like, okay, we're going to avoid that situation. That's going to probably score some political points with us. But we're just going to lower the multinational tax rate for corporations overseas to 10%. And then they're going to save a lot of money and not have to go to the Cayman Islands. So there's that. Now, they also lowered the pass-through rate for businesses to 25%. So as you can see, multinational corporations do very, very well in this tax deal. And of course, corporations here at home are taxed at 20% in this deal. So again, they also do incredibly well. So the cost of this bill, with all the provisions that we know so far put together, will cost about $1.5 trillion, and most of the benefits will go to the very, very wealthy. Even though I think the middle class will see a slight bit of a tax cut, but we're going to see how much that actually turns out to, how big that benefit's going to be. But so far, it looks like a gigantic boon for the rich. Now, I think the rich don't pay enough in taxes. Now, I don't want to punish them. No, nobody wants to punish them, right? We want them to pay their fair share. This is definitely not their fair share. Okay? And look, the other thing is that it blows up the deficit. I thought you guys cared about deficit reduction. I thought Republicans howled and screamed every time there was a bill that passed that they couldn't actually pay for, that ended up adding to the debt and the deficit. What happened? What happened? There's no dynamic growth. That actually doesn't work. The supply siders, it doesn't actually work. I know, we've tried it. So this is going to blow up the deficit. This is only going to add to the debt. So any Republican, anybody who calls himself fiscally conservative should be absolutely outraged and vote against it. But again, I think we have very few of those kinds of people on the Republican side that are actually fiscally conservative. Nonetheless, this bill for them, and for Trump specifically, this is must pass. Since, of course, this is the only political win that might actually get. If they fail to get these tax cuts, the Trump presidency is essentially over. They'll never get another chance. Not in the near future, anyway. I mean, think about it. They fail on the ACA. They failed to repeal and replace Obamacare, despite having a slim majority. And also, if they fail on tax reform, gone. So this is a Republican saying, look, all hands on deck. We got to get this done. Now, the Democrats aren't going to pay for it. They're not going to vote for it. So they say that anything that cuts taxes on the rich and corporations right now, since everybody is paying attention, is a no-go. So they're not going to vote for it. So they need all Republicans. They need 50 through their process, budget reconciliation. They need these 50 votes, and it's going to be razor thin. From what I'm seeing, some Republicans are like, absolutely not. I'm not going to add to the deficit. Some key Republicans in the Senate are not going to go for it as it's written so far. So we'll have to see. This is going to be a squeaker. It's going to be very close. And we're going to have to watch to see what happens. Hey, everybody. Thanks for watching this video. If you want to see more like this, please hit the subscribe button below. And if you want to support truly independent progressive media, please consider becoming a patron at patreon.com/TYTNation.